Hello, good morning, ladies and gentlemen. Here with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. As usual, starting with the North American coverage first. The Dow and the Nasdaq pretty much sideways yesterday. The Nasdaq moved just a little bit. The Dixie's down to 96.10 from 96.20. Not a big movement. Initial jobless claims yesterday, 3,000 better than the expectations, and durable goods orders, again, 0.1% better than the expectations. Durable goods orders, excluding transportation for last month, was weaker than expected by 1%. Market services PMI, 1.3 higher than previous, and composite, 1.1 higher. The dollar climbed against most other rival currencies on yesterday's trading as hawkish comments from the Fed spurred chatter of a rate rise this spring again, next month actually. Treasury yields advanced modestly over the holiday shortened week, during which terror attacks in Brussels and hawkish remarks by Federal Reserve officials dictated daily price action. On Thursday, bond markets closed early at 2 p.m. and will be closed on Good Friday today ahead of the Easter. We have GDP analyzed and price indexes and personal consumption expenditure prices quarter on quarter. Core personal consumption expenditure prices again quarter on quarter. Next week, the NFP is the most important event, and of course the manufacturing PMI and prices paid from the ISM Institute. European markets, the DAX 30 165 range yesterday, decline of 45. The French CAC 40 80 range and 45 down, 9 days of downtrend for the French index. German Consumer Confidence Survey declined slightly yesterday. The ECB economic bulletin was released yesterday. Now, I'll just give you a few main points from it. Financial markets have shown heightened volatility in the recent months. Also, global activity moderated at the turn of the year and is expected to continue expanding in a modest pace. Low interest rates, improving labor markets, and rising confidence support the outlook for advanced economies. By contrast, the medium-term outlook for emerging markets economies remains more uncertain. Another point is the economic recovery in the European area is continuing, albeit with lower than expected growth at the beginning of the year on the back of a weaker external environment. Real GDP rose by 0.3% quarter on quarter in the fourth quarter of last year, supported by domestic demand while being dampened by a negative contribution from net exports. The most recent survey data point to a weaker than expected growth momentum at the beginning of 2016. Another point comes from the macroeconomic projections for the European area, for which technicians foresee annual real GDP increased by 1.4% this year, 1.7% next year, and 1.8% for 2018, compared with the December last year Eurosystem staff macroeconomic projections. The outlook for real GDP growth has been revised slightly down, mainly reflecting the weakened growth prospects for the global economy. Also, the targeted LTRO has cut the bank loans from 18.3 billion euros to 7.3 billion euros. This was the report yesterday. The euro dollar did 45 pips range, but kept the negative pricing for 7 days in a row, declining with 140 pips just for this week. Good Friday today, so the FX markets might try to give the euro bulls a chance. We are looking for the French GDP, which is a preliminary report, and consumer confidence. Next week, CPI preliminary data and future trend reports from the ECB, Germany, France, Italy as well. Unemployment data from Germany is due on Thursday, if I'm not mistaken. UK markets, retail sales excluding fuel month on month, better than the expectations. Year on year as well, better than the expectations. Retail sale month on month, average report 0.3% better than the expectations, and year on year 3.8%. The GBP Kiwi 100 pips up. The pound had a little air on Thursday as retail sales showed a slight improvement in the sector. The sterling gained versus the euro and the dollar, but the upward movement is to be short-lived as the Brexit continues to weigh on the pound's performance. Next week, we will have the market PMI and consumer confidence for the UK main events. Asian Pacific markets, the Nikkei 225, 100 pips down on yesterday. It's still going down today. Good numbers from the national inflation reports yesterday. Most of the reports came out better than the expectations, slightly, of course, or as previous. We also had two reports for the foreign investments in Japan stocks and bonds. Again, good numbers, all in green, came out for the yen. So basically, we were looking for a higher valued currency, therefore the local stock market is still in decline. Leading economic index, 0.5 points better than the previous, which was at 101.8. Coincident index, again, 2.5 points better than the expectations. The pound versus the yen was the major movement yesterday with 140 range. Next week, the Tankan manufacturing reports are due. This would be on Thursday, if I'm not mistaken. We'll see all of the Tankan Institute reports on manufacturing and large industries next week. On Friday, we're going to look at the manufacturing reports from China. The purchasing managers indexes are all scheduled on Friday next week. Moving further to the commodities sector, starting with the S&P 500 index, which had a range of about 20 points yesterday. Currently, the price is 2030. The national gas storage change was weaker than the expectations, and also the Baker Hughes rig count 15 less at 352. Gold had a range of $12 down to $12.17. Silver had a range of 20 cents at $15.20 right now. The crude oil had a $1.20 range at $39.50 right now. Natural gas trading at 1.80 at the moment, range of 5 cents yesterday. After dropping to near 1 month lows on Thursday amid continued gains in the dollar, gold bared earlier losses following a soft monthly durable goods report, which slowed some momentum for the improving U.S. economy. Gold for April delivery on the COMEX division of the New York Mercantile Exchange eased down at 40 cents or 0.03% to trade at 1,223.40 per troy ounce. A day earlier, gold plunged 24.60, which was almost 2%, because of the hawkish Federal Reserve officials on a rate hike next month. This is pretty much all from me from today. Happy Good Friday to everybody who's celebrating the Catholic holiday. Enjoy the weekend and see you soon. Cheers. Bye-bye from me.